Hello, does it work? Are we all online? Can everyone hear me well? Good stuff. Let's just give everyone a few minutes to join. We can start. I mean, it's gonna be recorded anyway, so everyone can watch it later. How I can check how many people joined and okay, I see comments here. Let me just give it like a 1 or 2 minutes and we can start. Open tablet, maybe it will be easier to see the separate chats. Okay guys, let's do it. If you have any issues just with my stream, with how you can hear it, delays or whatever, just drop me a message or drop a message to Pranay or Enkrama. Tintermaster, why you can't hear if everyone else can? No, can't hear. Well, anyway, we'll probably check if it's not muted Tindermaster. I'm sure there is some other issue if everything else works. But yeah, anyway, let's start. So I wanted to cover a lot of different things. Sorry guys, I forgot that I don't have YouTube Premium, so you're gonna see different commercials while I talk. And then I will go through the charts. So I'm just gonna have that corgi background. Hope you don't mind. I wanted to cover a little bit of everything. So I was going through some old streams we had. I was going through a lot of DMs I had over the last couple of years and realized that most of the people have, I would say identical or very similar problems. And I went through every single one of them myself too. Obviously, some of you guys heard my story. I'll just very briefly covered how I started, but I want to just cover a few like big lessons I had that helped me kind of shape my trading or Web3 journey, however you call it. And I want to cover at the beginning of the stream some of the most common mistakes I'm facing, not only over the past few years, but literally on a daily basis. I mean, there's no week that I don't have a DM with issue I've seen, 5 days ago, 2 weeks ago, 2 months ago, and so on. So I want to go over that, and hopefully that will be helpful before we jump into any charts and talking about the market predictions and so on, so on. So as you know, obviously the guys who've been part of the Corgi calls for a while, I've been in sales since I was 21. I started as a sales rep. After a few months, I moved from Poland to England. As a crazy story, I didn't speak any English. So I moved. I had to learn English while I was, doing sales pretty much, which was crazy. But yeah, anyway, long story short, I did that. Started learning basics. I picked up the sales. Moved very quickly within the ranks, and after just over a year, I opened up my first office in London, and I was training people within a face-to-face sales. So we were doing event sales, business to business, business to consumer, and for 7 years was absolute grind. I mean, I was working about 100 hours a week, Monday to Saturday. Even off work, we did bunch of meetings. There was always something going on. At some point, I had over 50 people in an office, and it was insanity. There was always someone with questions, the problems, and so on, and so on. So what I realized when I moved to the trading, to Web3, to NFTs, and so on, that a lot of problems I faced in a sales previously as a business owner, as an entrepreneur, or even as a salesperson, are very common issues that you face in a trading as well. And I will cover some of them in detail, or some of them a little bit briefly. But in general, after COVID hit, I started exploring different opportunities. I tried a call center. I tried, opening different things. Didn't really, wasn't really something I personally enjoyed. And eventually I decided to leave England, like about 6 months after COVID. At that time I met my current fiance, and from Saturday a wife to be, I guess. And I started recruitment. So I was doing online recruitment just 6 months after COVID for about a year. And in summer 2021, one of the guys I was training in the sales, who left the sales business as well, said that he's doing forex trading. So I started looking into that. That was June 21, and seems interesting, something you can do from home and so on. But I wasn't like really hooked up into a forex. While I was searching, I came across crypto, and there was this big stream. I think that was a BitBoy, if I even remember well. That there was like, big market crash. I think at that point Bitcoin went from like 60,000 to 30,000, and BitBoy is actually talking about like Cardano, and it's a great opportunity to buy now. We're going back to 60k again, and so on. So anyway, I started watching various YouTubers and streams, and jump into NFT space. Minted some, missed out on Bored Apes, but I minted like Sappy Seals. Then I bought on secondary the Pudgy Penguin, and a bunch of other projects. So there was like I was completely new, so it's a pure chaos. But after like I think 6 weeks, I was around August time. There was a meta for NFT photography, and that was a kind of like I would say a turning moment for me, because I did pictures of my corgi puppy at that time. I made them black and white, uploaded them as NFTs. Spent like a couple of hours on that, on the editing, uploading, and so on, and went to sleep. And I think I posted that on Twitter. Went to sleep, woke up, and all of them were sold out. Mint was very cheap, but I had like 30 of them or something like that. And I woke up to like $3,300 out of the blue for literally pictures of my dog. And I was like, holy fuck. I mean, that's insane. I was like, if I can make it like every couple of weeks, not only from NFTs, but other stuff too, like imagine the opportunities that I can have in front of me. So anyway, I was hooked up. I started researching, started getting into some Discords, and got really into NFT space. But I did same sort of mistakes like everyone else. I went from couple thousand to like 25k. Then I pretty much lost it all. and there was some great opportunities, some rags, and so on. And then at some point, I just realized that I need some sort of structure. I need to understand what I'm doing, why I'm doing, how to start making profits consistently. And I didn't really want to get back to, 9 to 5 life. They want to get back to recruitment and seeing hundreds of random strangers applying for jobs. They want to get back to sales, and definitely they want to get start looking into jobs back into engineering. That's the reason I didn't even properly start it, because it just felt boring. So I decided to spend 2 months of them heavily into educating myself, understanding some chart patterns, understanding, the technical analysis and price action and so on. Obviously, I was still very, very new, but I started grasping some basics, which started shaping my understanding of the Web3 space and the crypto as a whole. And I also decided that there's opportunity to find jobs in crypto. So why would I just, make money only from trading if there are some other opportunities that you can make money on? And at that time, I don't know how it is right now. You could be a Discord moderator. So I did that, applied for some. I had a couple thousand followers on Twitter at that point. Got hooked up to the 2 servers as a Discord moderator. At the same time, you could get paid a little bit in stable coins and get some whitelist spots to NFTs and stuff. So I did that from November 2020, 2021. When was the COVID? 2021. November 2021. And started trading NFTs actively. Decided to deposit, I was not trading for 2 months between September to November. I was still working in recruitment, and decided to do the recruitment part-time from November, and started trading and working as a Discord moderator. And it was working very well. I mean, at that point, some of you guys might remember NFTs like Psychedelic Anonymous, Llamaverse, Non-Fungible People. Obviously, some others started picking up the steam, and pretty much went from depositing $2,000, was exactly $2,100 in Binance in November. I went to nearly 200K by February. And that was in unrealized profit. I realized some, and I started taking some profits in February. And I think a wake up moment for me was when I went, that was in March 2022, to Costa Rica with my fiance. And I remember I was in a pool, had headphones on, and I was listening to a stream from Voltura from Psychedelic Anonymous. And remember, he started talking about the next NFT collection they're gonna release, and how game changing is gonna to be, and the whole game theory stuff and so on. And I was sipping pina colada, being in a pool, listening to that. And I remember my headphones that I just bought a week ago fell into a pool. And he started talking some absolute bullshit on that stream, and kind of reminded me one of the sales managers I had experienced, how he was upselling opportunity we had and upselling the products we had. And nobody really, he was very good on opening offices and training people for a first a few weeks. And then every single office he had collapsed, because he started coming up with these new ideas and started changing things and so on. And I had this a deja vu, I don't know how to pronounce it, feeling that, something is off. And I literally went from that pool, went to the hotel, and started selling. I sold 90% of all the NFTs I had. I remember I was selling Llamaverse for 3.5, 4 Ethereum. I was selling Psychedelic Anonymous for 2 free ETH. I literally cleared my account. I think I left 10% of the NFTs and ETH I had and cashed out like 120K within 10 minutes. While in Costa Rica, probably drank from pina colada and so on. And left, enjoy the rest of my day, decided not to go online for like a week until I come back. And then things started to collapse. I mean, I didn't even know, I didn't experience really market collapse because pretty much since I joined since June 21, everything was in app only mode. So even when I traded leverage, I felt like an absolute god. Whatever I took in the morning, I was waking up to profits. Everything was working. I was doing 20x, 40x leverage. Making money on NFTs was beautiful. But from March to like June, I did pretty much nothing except being active on some Discord servers as a moderator and literally trading with that 10% of what I had left over. And as you know, what happened from March to June, everything collapsed like 90%. And I was very grateful for that deja vu moment that I cashed out. And that's also a period when we started opening a Corgi calls. And the whole idea behind that was obviously to help people out. Firstly, actually, we just wanted to create a community where you have a like-minded individual, some of them in NFT space that, struggle. Maybe they're a little bit sad, depressed, they lost a lot of money, that we can help each other out because everyone was hoping that, eventually we're gonna bounce back up. And that's how we started. And, long story short, where we are right now and where I am as a person and a trader and investor it's a completely different spot. And that's pretty much almost 3 years since that period when I think Bitcoin was July 2022 was 16,000 and we are in May 2025. So that's nearly 3 years and it's going to be almost 3-year anniversary for Corgi calls as well. And we went through a little bit of everything, on-chain meta and free mint meta and, NFTs, leverage trading and so on. And there's a lot of mistakes I've made personally, a lot of mistakes that I've realized that I was doing consistently that, I believe made me better as a person, better as a trader. And I started approaching it more on, in a way like it's a business, it's a work that can give me sustainable amount of income for extended period of time, rather than treating that as the just a random opportunity and trying to gamble money to make a little bit more. So some of the most common things I would cover is firstly the back holding. And I think that's one of the biggest mistakes everyone experiences. And that comes to the crypto space, comes to NFTs, to on-chain. And I think that one of the most important things you have to realize in crypto that 99.9% of projects are scam. They will disappear very often within a week or two, could be a few weeks, few months, could be a year or two. But nothing is safe. Like you have that pro-mile chance, that 0.1% that something is actually worth it. That is the next Bitcoin. Could be, I really like Hyperliquid. I hope it's gonna work, but like it's not Bitcoin. It could do incredibly well. It's one of the most well thought projects, but like it's never a point that I will go all in something. And I believe that there's no chance it will go to zero or near zero. And over the last years, we did the various AMA streams, FAQs. I've realized that a lot of people ended up in this spiral that you forgot to take profits. I don't want to name the communities that you guys know yourself. And some people still holding NFTs since NFT bull market, in 2021, 2022, which is crazy. But you have to realize that the higher those projects go, especially early on, the less motivated founders will be to deliver the value. So we saw that on the on-chain meta, we saw that with crypto projects, the same with NFTs, that early on it's like, you're going on a first date and you want to make great impression, you shave, you put your best, let's say Hugo Boss clothes, you put your watch, you cut your nails, like you are ready. You want to impress that girl or guy and have incredible time together. And most of the unfortunately relationships, in like 2 weeks, 2 months, 2 years, they have this like a curve that the level of giving a fuck is going up early on consistently, and then over time the magic disappears. And it's exactly the same thing in crypto, in whole Web3 space. Like if you look on every single NFT project, except maybe selected few, like let's say Pudgy Penguins, for example, like that they're maintaining that value and trying to still provide. Although currently I think it's slowing down a little bit. But like after that initial, the bull run, the first cycle, all of these projects have, founders and team and insiders are cashing out so much money that eventually they just want to maintain it, to make some, rather than provide the value for you or anyone else. We saw on-chain projects going from 0 to 200 million or 300 million, whatever number was, for example, for like Ator, 0xO, and they were like active with updates literally every day. Something was going on, AMAs and spaces, then they were so excited and pumped up. And then they started, you can feel that they started cashing out, the market started turning and everything dropped 80, 90, 95%. And the level of give a fuck dropped too. And the same thing with NFTs and everything else. So there's no loyalty in this space in terms of the investments. And a lot of people just end up backholding XRP, Cardano, Polygon, currently Matic or Poly, however they fucking called it after third or fourth rebrand. And they're all like a nice Ponzi's. And you have to understand it that like pretty much except that 0.1% are a Ponzi's to extract your money. And your goal is to extract money from ecosystem and make it for yourself, but don't get fucked over by those founders, by the greediness, by the belief that they are gonna build something life-changing, because the chance that they will, it's very, 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 very slim. So I think that's the first thing to discuss and understand, that taking profits along the way works pretty much every time. Even if you take too early, you take on a 3x and then on 8x, then 15x. I mean, we have people on a server that made 6 figures on SPX, on Fartcoin, on a bunch of other coins. And the problem in the space that instead of, even if people cashing out, they very often like have that loyalty to the project that they started buying back very often too early and losing up at least 60-70% of the gains they've made, because they're trying to get back, step back into same water. It's that the saying in Polish, I don't know if it makes sense in English, that just you shouldn't step back in a same river. Once you get in, get out, dry out, and you're not stepping again. And people keep doing the same thing. And I'm seeing that with Weave and Popcard and Fartcoin and with NFT space and so on. So if you cash out, observe the project, let it, a lot of them are dropping down 80, 90, 95%, and you can buy them way cheaper. I know the guy who cashed out Fartcoin at 180, got it from like 2-3 million market cap or something like that, and then started buying it back at like $1.20 while Fartcoin dropped to 20 cents. and he lost pretty much like 70% of the money he made initially just trying to make it again, so to speak, you know. So what may help me to realize that, it's a realizing the profits. You know, everyone have a different situations. You know, some of you have kids and pets and fiancés, wives, dream holidays, dream cars, and so on. If you make good money in trading, regardless if it's a weekly, monthly, the good idea is to cash out at least 50, 60, 70% of realize the profit, put it in a bank, either in a savings that you're not gonna touch, or buy something what you wanted. Maybe new screen, maybe a new laptop, maybe a car. I mean, we saw the crazy profit braggings we had sometimes, like people buying wedding rings and paying for honeymoons and so on from the profits. And you realize that those two NFTs you've sold, like, it doesn't really fucking matter all that much. Nobody cares about those people who sell shame you, or about founders saying we're gonna go to the moon and whatever, because the real stuff is outside of crypto, outside of NFTs, like the things that matter, you know. So I think that's the first thing I wanted to cover. I know I elaborated that a little bit too much, but I just can't stress it enough how important it is, and how, in a way, life-changing it is, I would say. Next thing is trying to make it big by gambling. And what I mean by that is, we've saw recently, I mean, in the space of last 10 to 14 days, we had the spot calls and some even degen calls, which were not even overly degen, doing anything from 20, 30, 40% within a matter of days to 4, 5, 6, 7, 8 X's, you know, and that's in a current market. I mean, we saw so many altcoins or Bitcoin literally going from 74 to currently 99, and bunch of altcoins bouncing like crazy. And look, I'm sure you don't need to always catch the bottom, but catching 20, 30, 40% move is huge. Even if you trade spot or you take it on 2-3x leverage, let's say we had a pop cut 2 days ago and went 25%, and you take it on 2x leverage, that's 50%. Even if you're playing with a smaller capital, even if you've, let's say, put $500, that's extra 250, you know. So it's a huge difference, but a lot of people missing out on those gains because they're trying to catch the big move with a high leverage, you know. So, we had people taking the bonk calls on Popcard and so on with 10x, 20x, when I clearly said it's a spot or low leverage call, purely because they are very volatile. So they can get back to your entry 2, 3, 4 times, sometimes within a day or two. They can, get a little bit into, you can be underwater, they can be a little bit in red. And then when they bounce, you already stopped out, and a lot of people missing out on that. And another thing is, just because you have available leverage up to 100x or 50x on most of the exchanges, or even MXC or Rollbit have 1000x, doesn't mean you have to use it. Because if you compound your wins, you can make actually very significant amount of money. I mean, realistically, even if you make $100 a week, that's $400 a month. Might not sound significant for some of the people. I know a lot of people that'll make a big difference, especially if you, let's say, live in Eastern Europe, Thailand, Bali, or South America and so on. I mean, $400 is a lot of money. And that $400, if you multiply it by 12, 12 months, that's 4,800. That's extra $5,000, and that's already a decent addition to the average salary. Even if you focus on compounding, getting those small wins. And I think most of the money I've made was from waiting, not from trading. So it wasn't from catching 5 trades a day and trying to catch every bottom and top and so on. It was from picking up the right coin or right NFT, like we saw Prane with Hipio. It's been 7-8 days? Sorry. And you could make literally extra, I think came up to 2,000 something dollars within a week per NFT in terms of hype increased price and NFT increased price, plus about $3,500 from airdrops. So that's 4 to 5K in a week from the one NFT. You just need for most of the people, one play like that, and month or a quarter, it's already huge. But a lot of people trying to chase multiple trades and taking multiple trades on a daily basis and weekly basis and keep flip-flopping and changing their mind. And eventually, they just more likely to give up the profits, It's like more times you try, you're more likely to fail. Obviously, more times you try, you're more likely to win as well. But in a trading sense, the quality is more important than the quantity. And I think that's something important to understand. And other than that, I think the third point I wanted to cover in terms of common mistakes, and then we can get back to some charts, was... Sorry, I lost my plot. Let me just find my notes. Third common mistake was not understanding the basics. So we put some educational content on Corgi server, and I think it's a very simple and straightforward to spend. If you spend the 30-40 minutes, even a couple of hours, and read through that couple of times, you'll understand way more about the market than an average person. Most of the people have no idea what the patterns are, how to size your position, what is risk management, and so on. And I think it's very important to understand the basics in order to make money consistently, So things like firstly your positioning, like a size you're using, it's very important. If I have a $10,000 portfolio, let's say I put 10% in futures, so that's 1,000. I am not using entire 1,000 for every trade, and which I know maybe it's surprising, maybe it's not, but a lot of people are doing that. They have $1,000 in a futures account, and they're putting $900 plus leverage in a trade. I mean, that's insane. You should put 10% in a trade maximum, probably even 5%, from your future account size. So if your account size is 1,000, the maximum trade should be $100, $50 to $100, let's say. Probably 100 is already too much. But if you take in even 5x leverage or 10x leverage with 2-3% stop loss, I mean, you're not really risking all that much. I mean, we had trades like even the Bitcoin re-entry I posted yesterday. You have a 0.7% stop loss. So you take the, let's say, $1,000 trade of 0.7% stop loss. Let's say you take 10x. So you're risking 7% from that 1,000. So about $70. And it went up 4.5% from the re-entry I posted afternoon. So on 10x, you have 45% reward for 7% risk. I mean, it's a pretty fucking good risk to reward. You're risking $70 for potentially 450. I mean, you can't complain. Now, you're catching once a week move like we posted, let's say Popcat 25%. You take it on 2x, that's 50% move. Stop loss on Popcat was about 5%. So you take it on 2x leverage, so your stop loss times 5%, it's 10%, and it moved 25%, that's 50%. So you're risking 10% for a 50% gain. I will show that on the charts a little bit later, but I think people just sizing too much. That's the reason. If trade is not going your way, and you have to expect that half of the trades are not going to go your way. Like if you look even on the best traders, let's say XO or BTC Charlie, wherever, or CBS, they don't even have more than 60% win rate. 55, 50, 52. But because your losses are so small and managed, when you win the 2 hour, 3 hour, 4 hour trade, it's making up for losses plus profit. You don't need to look for 70, 80, 90% accuracy. Very few people do that, and it's not really sustainable in a volatile market. You just have to win more times than you lose and manage your risk. Use the same size, same leverage. I'm not gonna name names, but I see one person definitely on the chart who is like taking one trade with 20x leverage, other with 80x, other with 25x, the other with 5x. There's no system, it's just a pure chaos. It's not how it works. You will never make money consistently in trading if you have no system. So that's one. A second thing is pick up your battles wisely. So you want to size up when market is panicking or market is breaking out, like when there are clear opportunities for an upside, and size down, or look for shorts when is a euphoria, FOMO, incredible news and so on. Most of the people do the opposite. They sizing up too late. So let's say we were doing some spot calls or leverage calls 10 days ago, 2 weeks ago, and nobody was interested because the market wasn't so bullish. But now suddenly more people are online, more people are excited. I had my barber send me a iMessage today asking that Bitcoin almost 100K, is a good time to buy. That's literally how people think. But before I left Portugal and we were like 76, 78,000 and so on, it was absolute panic saying, I'm just cannot wait for 40, 50,000, so I'll buy some, That's how most of the people think. And I think it's a very hard to guide through the current market. And I think it will be incredible opportunity for the traders, for people who will learn how to trade and invest. Thanks to Trump, so to speak, I think we'll have incredible volatility on all the markets for the next 4 years. I don't think there's going to be any 3-4 year cycles. I think we're going to have these periods of 4-6 weeks of absolute blast, up only, FOMO, everyone's excited. Then you get back to the 2-3-4 months of that downside chop, that you chop for a week, consistently down. Then there's a quick fuck you candle to obliterate shorts and then continue to bleed. I'll show some of that on charts, how it looked, to explain you a little bit more. But I think that's the market will have. Let's say we're gonna have fun until, let's say, early June. And then it's going to be nothing for until September. A lot of chop. Most of the people give away the profit and fuck around on the market and don't make anything significant. And then they won't have money in September or October when market pumps again for 4, 5, 6 weeks because they lost it in the summer. And that is happening consistently. So you have to pick your battles wisely. And know when to size up and size down in your risk and your portfolio and so on. And nobody, including myself, we're not going to be correct. Probably most of the times we're going to be wrong in like any medium term predictions, because it's such a news driven market. So it's a pure chaos. The numbers say one thing and the market says something completely different. So you just have to stay fluid and don't marry any sort of bias and just prepare for any scenario. I mean, if we go to 110K this week, would you be excited or you sidelined? And most of the people will probably start FOMO buying around 110K. It will be absolutely crazy. And then 10-15% candle downside to Bitcoin and they're gonna get obliterated. So anyway, that's something to think about. Hopefully that was enough for introduction. As usual, I overtalk. I'll just go over some charts and some logic behind my trades. We're gonna close that fancy video we had and so on. So just to cover a little bit how I look at the trades, I will recommend everyone to have a trading view. I don't know how I traded from exchanges. I mean, a similar like trading view, but you couldn't have everything set up in the same way. That's something I changed recently, and it's a huge difference for me, and it's so much clearer. You have the overviews on different markets, you're monitoring everything, it's beautiful. Don't use anything fancy. Spaceman, BTC key levels, you can find them on the trading view. That shows you things that are very important, like previously quarter high, yearly open, month high, previous week high, weekly open, Monday low, Monday high, and so on. Those are fucking game changers. Like look at the BTC call yesterday. So that call I made yesterday, so let me just clear up we can clear that up. It's gonna be a little bit easier here and here. I'll just explain the logic behind those calls. Hopefully that makes a little bit more sense for you. So let's say I look on a 4-hour time frame, and I'll look on a Bitcoin over here. You have a very clear trend line. I had that discussion, I think, with Mr. 125. You have a very clear uptrend, series of higher high, higher low, higher high, higher low, higher high, higher low. Sorry, higher high, higher low, higher high. Probably at some point we fuck around here, we're gonna print a higher low, and then we'll see if it breaks down or we continue the trend. So you have a clear trend here. That's the reason 2-3 days ago is looking for longs, because we're at this monthly open, between that monthly open and a yearly open, so the 93.5 and 94.1 level, and there was this consistent chop over here, the decision, but we still held that trend line over here. We still close every 4-hour candle above the yearly open, which is my invalidation, and that's where we picked up that the trade. And you have a very simple setup. I mean, you're looking to enter within that bracket here. That's the previous range, so let me just draw it. So you're looking to enter the trade in that bracket, in that consolidation over here, which we did. And your invalidation is very, very simple. I mean, you take in long, let's say from here, how we called it, you have a stop loss under the wick. So wick is 0.5%. So you drop it at a little bit lower, so you not get SFP, which is stop loss hunt, somewhere here. And then your objective one will be the Monday high. You can take a small TP here. Next one will be previous month high. That was already, that we didn't have even any stoppage. It just went straight through it. And immediately, like if you can see in literally 2 candles, we went to previous week high and pretty much clear up every single short that was here. So just to explain you some logic. So let's say a lot of short positions open here before, and all of them had stop losses in this area. So they started moving the stop losses a little bit lower as market dropped down. So they were taking profits on the shorts. Now we had a little bit of consolidation. Some people, let me change it to yellow, will be probably easier, a little bit bigger line. We had a little bit of consolidation over here. Some of the people just like started shorting here, was way too late. Trying to push the market down and started market manipulation. And then literally with what, 1, 2, 3, 4 4-hour candles, so 16 hours, we went and obliterated all of the shorts over here. Like everyone who opened a short day, 2 days before, everyone gets stopped out. And as they stopping out, they basically, like in a way, opening a longs and got all liquidated, which squeezed the market back up here. Then we got a little bit of consolidation. And that's another logic I had with the entry yesterday around the FOMC. I didn't want to chase it because it's usually a very scammy move. What I was looking for is the previous month high, because you can see there was a period. Oh, let me just clear that up. I always draw too much. So there was the area where once we break out, we went straight up towards 98K. And also there was the area when we break down and also EMA started curving here, we dropped down heavily straight away. So this was my invalidation here, previous month high, and that's where I was looking for entry. And literally market like chopped around and to the dot. Like, I mean, if you zoom in, look literally where was reaction, probably on some other exchanges was exactly from there. So I said, you look for entry around this area. That was literally what I drew. What, way too many drawings. I'm not drawing anything. Just over here, you look for entry. Your invalidation as per chart yesterday was, let me just show it. You look for entry around here. Your invalidation will be Monday low. Let me just move it. So Monday low was over here, so just below that. And we already had candle pretty much to just under 100K. So that you have another similar like 4.5% move with under 1% risk. Does make sense? So that's the way how I, for example, took the last Bitcoin trades. Other thing I'm looking at are EMAs. You can use the Trader XO macro trend scanner. It's also in TradingView. Pretty much is giving you 1225 estimated moving average. Like that's on 4 hour. You want market to trade above these bands. The wider they are, the more volatile move is, as you can see over here. Like look at how crazy it was. Very tight consolidation, and the wider this move started happening, the crazier candle became. And as long as we held above that, you see all the dips below, immediately acceptance back up, we are in an uptrend. And here was a cause of concern because it was the topping move. We started accepting back down. The EMA started curving down, as you can see over here. They started tightening down, and once they crossed, we immediately dropped down. So that's the easiest. Like a 4 hour chart is the most magical chart you can use. It's very simple. You literally just need a 1225 EMA, key levels, and you can start your trading journey. It's not too complicated to start from there. You don't need to really overcomplicate it with any magic stuff to add on a chart. It doesn't need to be that crazy. And other charts we are looking at, what it was like, let's say PopCut. I mean, we had the first call on PopCut, what over here at 31. And usually when you look on a coins like that, you can look at the, especially after big drop like we just had, you can look at the EMAs as well and the daily. The easiest way is to start from a daily chart. So let me just show you something. If we look on a PopCut, it was consistently, let me just change this color to yellow. Why does it keep changing to red? There we go. So we had a consistent uptrend over here. As you can see, we are all the time above EMA 1221, small dip, acceptance back above. There was a huge uptrend, pretty much up only, as you remember from the previous cycle. Now, immediately, like if you start looking, started rolling over, the first time we had this cross here between EMA 1225 on daily, that started the downtrend, confirmation of a downtrend for PopCut. And you can pick up any chart. I will show you one or two more just to explain a little bit more. But like you're looking on that EMA 1221 crossing over here, it started a downtrend. You had a big move down, then it was a little bit fuck you candle to rinse the shorts. And since then you had literally down only. And you can see that we had no acceptance above those bands. They kept us all the time from literally that cross at 156 all the way down to 15 cents. So you don't really need to catch the perfect top, but look at that. 90% drop from the cross alone. Insane. And that's also, you can look at that spread between the EMAs. You see how wide it is. Means there's no change of the momentum whatsoever. So its momentum was still going down. Now what you can see over here, we are still on a daily, that we started entering that phase of a consolidation. It's not really dropping down. We're just entering that chop period. It's not really dropping down anymore. And also EMA started getting tighter and tighter and tighter and tighter. You see that? So we got this one last big drop. And now literally since those EMAs here crossed, you see over here on daily, we are in uptrend. Literally since then, we are up 159% on the PopCut. And obviously we didn't catch the whole move. I did the multiple trades on that with the smaller moves. We took it somewhere over here, the first call, just under I was expecting a breakout. So that's the EMA, I believe, 99 on daily. And I was expecting once we break out, we're going to get a big candle to the upside. So we caught this move, took profits, then pretty much got back to entry, started consolidating over here. And now those EMAs are driving back up. It's continuing the uptrend. So as long as the rest of the market behaves, I wouldn't be surprised if you see PopCut going all the way to probably 65, 70 cents, maybe even yearly open 73 over here before any significant drop. That's assuming that Bitcoin holds up. Obviously, even if we cool off and Bitcoin, let's say, we cool off over here, drop down, it's not going to be in a straight line, and then could be another one. So it could be another opportunity to enter. This looks like a support. So even if you don't know how to draw the support and resistance, you go on daily, you see that cluster of the buys and sells. That's a clear support. If we do something like that on a PopCut, so let's say we started rejecting from 50 cents and we drop back around that monthly open, so between 40 cents to like 36, that's a great RR to try to enter for another long with invalidation just below the previous week low. That makes sense? And then you can target again a yearly open. But maybe we just go for the straight for the yearly open. Who knows? And I don't know, let's pick up some other charts. Fartcoin, that was a huge mover. So if you look at the daily, maybe we'll look at 12 hours because it has a little bit less history than Popcat. So it's harder to look at the daily time frame. I mean, this was one of a hell of a crazy chart. Look, over here, I did not really trade it. I know people made incredible amount of money on it. But anyway, if you look at that, it looks like a classic blow off top, like Burj Khalifa, over here. But let's say you didn't catch the top. You're just looking at 12 hour and you look at that cross here between EMA 1225. You see? Just over here. And we are on 12 hours. So we're still looking on those higher time frames. From there, you saw the drop of 86%. And since then, you can see there was no period of time that we accepted above the EMA 1225 bands. Just no. Straight pretty much downside for multiple weeks. Now, again, you can see the same thing will happen in Popcat over here. It started bottoming before market bottomed. You see that consolidation over here? So multiple weeks of consolidation. Even if the market was going down, it still didn't really went that much lower. We had some spikes over here. And now immediately from the point that it started crossing back up over here, it started cross, fell, cross, and here's the first acceptance. That was the 18th of March. You have a first acceptance above the EMA 1221. And since then, it's literally up only 320% if you just held spot. I just traded multiple times. You guys saw on the chart too. We called it first, I think they posted first time somewhere here. We caught that move, started taking profits, ignored it here. Then I caught it somewhere here again. We caught that move, started taking profits. And this one was like more of a leverage trades. I didn't really play spot over here. Now the tricky thing, and now it's something to observe, is what will happen over here. Are we going to see something like that? That is a quick drop below EMAs, accept and back up, and we back to trending. Or we actually see so this one, and we holding. That's the reason this like a 108, 110 level is important. And if yes, if we hold it, and if we flip, especially above that, let me just show you Monday high that's rejected here twice. You see, once, twice. If we consolidate here, flip above Monday high, then you don't even look at the previous highs. Most likely we're going straight to probably like 135, 140. Somewhere here, just to clear up all of that. But now the tricky thing is, if Bitcoin shows weakness and Fartcoin starts rolling over, and those EMAs already started crossing over here, if we see that will be start of the downtrend, and we can short it, or you can sell if you're holding a spot. I would say most likely towards this level. You see, you have the here reaction here. That could be pretty decent support just around here, and that will be a decent entry if we start accepting the below EMAs. We're actually gonna get that crossing. So then we can look for a move like that. I don't know if that, hopefully that makes sense. I'm just trying to explain how I see things. So we either accepting below weekly open on a high time frames, then your first objective is here, yearly open. And then if we start accepting below it, your next objective is going to be here. That's where we had a reaction and reaction over here. That's your support. Now, if we start consolidating here, if you don't want to catch the knife, we have an indecision still here. You can wait for a flipping of Monday high. And this could be a good entry to pick up the spot targeting 135, 140. If that makes sense. So yeah, Fartcoin. Let's pick up one other chart. To Kaito. We had a crazy move on Kaito. So it's something similar to 64%. Oh, they're insane. I sold it everything at 55, 67% from the call. I mean, it's insane what the opportunities you can have in crypto. I just don't know how people can not love it, not trade anything else. But like, let's look at Kaito. I mean, we had lunch, so let's keep on a 12-hour. It was holding that trend line over here. It was blow off top. It's hard to even chart anything what is on like a fresh launch. But if you look now after we have a little bit of history, even if you started getting EMAs over here, we can even change it to 6 hour because that will give us a little bit clearance. So less history means EMAs are estimated moving averages. So if a chart has only like 3 months history like Kaito, I'm not gonna use the daily or 12-hour chart. I will use 4 hour or 6 hour. It just doesn't make sense. But on a 6 hour, you can pretty much see the mirror what we saw on Popcat or on Fartcoin. So you see this uptrend over here. And literally the moment you see this crossing over here, I'll zoom in. I mean, that's the, I know maybe sounds very simple, like crude even, you can say, but this is the simplest way to look on any charts if it's a buying or selling opportunity. You go on a high time frame. If chart has a 1 year history, you can use a daily chart. If it has like 6 to 8 months, you can go 12 hour. If it's 2, 3, 4 months, you can go on 6 hour. And literally, again, look at that crossing. It happened over here. Since then, you have a down only trend, except that crazy fuck you candle here. So you had a drop, fuck you candle to, again, the same what we saw on Popcat and Fartcoin to liquidate all the late shorts, literally in one candle. Absolutely brutal. Acceptance, look at that. It moved here, went just above, accepted below, just above, accepted below, and you have literally downtrend since then all the way here. Every single pop to the top of the bands, sell, 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 sell. You see that? You can, if you really want to scalp, not my thing, but sometimes I try on a lower time frames, you can literally just look for the entries over here on higher time frames and just slumming back down every single time you see that. And since that crossing over here, the whole, like that's the de-risk. Even if you don't short it, because it's sometimes, especially in early stages, it's hard because you can get that early, that fuck you candle, so to speak. But let's say if you want to de-risk, you holding something, you see something like that, 67% drop from that cross. It's a game changer if you understand it and you can play around it, test it on different charts. It's beautiful. And now, look, we zoom in over here, 6 hours. Now you have that EMA 99. It's not fully done yet because its chart doesn't have enough history. But what you can see over here, we didn't even have that much of a consolidation. You started having these very tiny candles. That's a twap. So that's team buying. Every sell, they just buying more that was sold. You have that trend line establishing here, literally on the up only mode. And that was the team twapping over here. You can see that that's what Sailor does on Saturdays or Sundays. You can see that often on Bitcoin. That's how I recognize that someone is twapping. That's the twap, which is consistent DCI, buy. They don't care about the price. They just have an order set, and it's just consistently buying up the coin over extended period of time. So you have that. And now we had that cross just over here. As you can see, even on the Trader X or on that macro trend scanner, it even shows you here bull. You had that cross over here, and since then we've been in up only mode. You had this big move over here, rollover, some consolidation, ascending triangle, and then the breakout, and boom, since here was crazy. So anyway, here we had the uptrend, so there was a good opportunity to probably buy some on the spot if you were looking on this chart. I think we caught like a 20% or 15% move on it at some point like a few weeks ago. Took profits, roll over pretty much back to the entry over here. And now, literally the moment it started accepting back up above the bands, just over here, it did this crazy fuck you candle. And we didn't catch it here. What I saw is I was watching on the chart, and I saw the crossing, and then I saw that they started accepting here above the... let me zoom it so it's a little bit more clear. 1 second. There we go. So we had that crossing over here, and then he accepted above EMA 99, and that was our entry, I think, at 90 cents. That's when I posted the trade. He will literally break out, retest, and flew. And that was a call I posted. You had a very simple entry here, and I posted that around 90 cents. Your invalidation was that week, so just below that week. So if crazy 4% invalidation on 67% move, and it just went absolutely bananas. Boom. Does it make sense? So that's just a little bit of education. Now just the last thing, we can say a little bit of market prediction, or how I see that. So very quickly, SPX, we can look at 4 hours. Super simple, and Chroma is just editing video over here. But if you look at that, you're basically looking for any of a retest in this area over here, which is our previous month's high. Any push over here and acceptance below previous week high, it will likely trade back to the bottom of the range over here. Now, if you want to be bullish, if we're looking for the back to the full-on uptrend on SPX, I wouldn't really be confident unless we started seeing the acceptance above this previous month high. Then first objective will be yearly open, and if we flip it, then we're targeting a fresh all-time highs if you look at the higher time frames. But until that happens, this is pretty big resistance. This is the cross we had to do. We started try to have acceptance above. We rolled over. There was a crossover here between EMAs, and since then we had this ginormous drop on SPX over here. So until that area is cleared, you have to assume that this is a sell area. Let me clear that up. And the same on the buy side. If we get the drop, let's say we get that trade over here, I'll look for shorts. And if we get that retest over here, you see that reactions over here, 1, 2, 3, 4 here, slump and acceptance above. If we get the retest in this previous quarter low area, then that's the good entry for spot if you're buying indexes or for long, and then you can target, well, firstly quarterly open just over here, and secondly back to the top of the range. What I think for SPX and similar for Nasdaq, not gonna chart it separately, it's pretty much identical, is that we might see something like that for the coming weeks. And then we'll see the decision. And that will be either decision which probably, because it's a summer, I will assume that we break to the downside. But I'm not gonna play with the predictions until this holds and we still above this previous quarter low, which is about 5.5. Now, if we start, this acceptance above here, then at the all-time highs, Bitcoin gonna go to 100, 140, 50K. SPX is going to new all-time highs, and we're gonna have absolute blast. But until then, we are entering resistance. I wouldn't really chase anything right now. I don't know if it's understandable, but pretty straightforward outlook. Now, if we look at Bitcoin, it's beautiful. Right now, if we look on the weekly candles, clear uptrend since we started. Even here, every candle is engulfed, which means the candle body closed. Let me just zoom in. Candle body closed above on a weekly, which is very clear indication of the uptrend. We're holding that trend line. There was the make it or break it. Remember, we're talking about that 90 yearly open area to be a battle zone, so to speak. So if you look at the 12-hour, look at how many weeks were just like under, above. There was crazy over here. Like all of that was just a fight between bulls and bears, but we were getting consistently higher highs, higher lows, and it was holding that uptrend. That's the reason I stopped looking for shorts over here. I started looking for some buying opportunities because there was just no sense. Other thing we starting to see is the EMAs are curving back up too. So besides of the EMA 1225, you look at this 299 EMA that they're holding the trend line. So let me just show you. If you look at the 12-hour or even on let's start from a daily. I think on a 12-hour is easier. On 12-hour, so you can see that whole uptrend on Bitcoin we held above EMA 99 since 60,000. Yeah, pretty much 60,000. You see that? That's the orange line. We held it all the way above every single touch we had with it. We provided reaction and we're pushing back up. Now on Bitcoin, I like to look on 99 and 200 EMA because you can look here. The moment they crossed over here, you see that 97.7, and you remember I was talking about 95.5 level. That was a little bit lower. That was where we keep getting reactions from those weeks here. And that was my invalidation. I said if we closed the 4-hour, there was no 4-hour candles closing. Let me just zoom in. below the 95.5. You see that? Reaction. You had like a literally 15 candles bounce from that region. And you remember me saying that the moment we accept below the 95.5 and close 4 hour, I'm out. And look what happened. That was that acceptance over here. Then there was this squeeze on the stupid Cardano or whatever bullshit news. We squeezed, literally identical to Popcat and Fartcoin. You remember this chart I showed? Squeeze, liquidated all the shorts, slam it back down. And the moment we got that crossing on EMA 1299 200 over here, it held us in a downtrend all the way to 74. See that? And any touch you had here, boom, close by, here, all of these reactions were sold off. Now here we started getting that breakout. You had a little bit triangle consolidation building up, like that. And we had this chop over here. The moment it breaked out, it went literally straight for 95. And there was also the moment that we saw the here EMA 1225 crossed. We kept above it. And then we also crossed above the EMA 99 for the first time, crossed and accepted. So you see that up, retest, holds, and straight up. And that was the first time it happened since that 97 level. And that was a bull signal. It's like, fuck the shorts. You know, we are in an uptrend right now. And we're just focusing on longs and spot buys. And that's what we're doing mostly. And then we're just waiting for the reaction in this area, what will happen. Because what we could have, it's pretty much that candle over here, start getting acceptance below it, and then very likely we'll get back to this area of support over here, like this 85, 82, if that was happening. But we pretty much mirrored that price action from lower, started building that consolidation over here, and broke up again. Consolidation, broke up again. Now, personally, how I see that right now, so I think we're still in an uptrend, at least for the next few weeks, as long as we are holding this level. So let me zoom in a little bit to make it clearer for you. There we go. So you see this? That was what we were looking potentially for shorts. And we had a reaction here 1, 2, 3, 4, 5, 6, 7 times. And that built us significant support in this area. So if we get any retest in between that, I would say 93.5 to 91.5 region, if we get any retest in upcoming weeks here, and it holds, that's the buying for spot for longs, targeting back probably those highs over here. You have a very simple invalidation. You have that we just don't want to see acceptance. None of those weeks accepted below, you see. Every single week closed above 92.6, if I'm correct. 92.6. So that's your level. As long as the high time frames closing above this 92.6, I'll draw it. There we go. You see, every single candle body closed above it. So we can even go below, but if we just need to accept on the high time frames, daily, 12-hour, hold above, and that's your buying opportunity if we get any dips. Now, if we look on a daily time frame, well, we're in a tricky spot right now in terms of decision. So here we pretty much cleared all of that area where we started break down that 97.7, 100K, all of that rejections over here. Now that's pretty much the resistance. I love the resistance area. Pretty significant. Like if you look at the high time frames, that was a lot of selling. Like pretty much if you look on the charts, anytime we try to accept above, slam it back down, below, slam. Anytime we touched it, bang, down. Here, traded a little bit above, accepted below, slam. Does it make sense? So even if we stay there for, few days, like over here, this is an area that you want to start taking profits, or be cautious that we might get some significant sell-off. So what I think might happen if we are to push in upcoming days, we might push to this area, and usually first reaction, like you see over here, well, it will be hard straight away to break it out. It's 1, 2, 3, 4, 5, 6, 7. It took 8 daily attempts at first to break up above it, and even if we broke up, it was very short-lived. On the 3 days we accepted below. Here 2 days back below. Here was a long consolidation, but once he accepted below, boom. So if you want to look in upcoming days, is taking profits in this area, it's probably smart. What we might see is we squeeze back up, you see alts running, it's gonna be absolute FOMO on the timeline, Solana goes to 180, Ethereum goes to 2100, everyone's going crazy, could be 2 days, 5 days, maybe 10 days, wherever. But the moment we started seeing some weakness and the structure changes from that chop over here to something like that, that least likely we'll see something like that happening over here. You see, every time that happened, we just saw sell-off. So, and you started seeing on high time frames changing to let me just make it slightly slimmer. 2 pixels. Yeah, there we go. Zoom in. And then you see a structure doing lower low, higher low, lower low, higher low. And that indicates that probably there's a high chance we see some sort of fuck you candle to the downside, and is a good time to de-risk or look for shorts. Probably not over here, because we can see the quick, candle up, maybe not 107, but let's say 105, and then accept it back below. So I think a lot of shorts will be piling up in this 100 to 102k area. We might see a quick candle up to liquidate all of them, and then start consolidating, accepting back down. Now, if I will have to guess, I will say that within the next 4 to 6 weeks, we might see something like that. It's just a dubious speculation, so to speak. So I wouldn't say that it's exactly what happens, and it's not actionable until we see, how the market reacts, how the stocks react, and so on. Bitcoin decoupled from stocks is way stronger, but if we see significant sell-off on stocks, Bitcoin will follow one way or another. So what I think we might see is a bit of chop here. Alts going crazy, Ethereum leads here. And now here will be first trouble area. So if we are here to maintain the uptrend, the trend line here, I will look for possibly some reaction over here, either for higher. You see that trend line around the previous month high, so about our yesterday's entry, 95.7, 95.8, this area. I'll extend it a little bit. So that's where I'll be looking for reaction for either bearish retest to somewhere over here and then continue a sell-off, or it will be just to bite bulls, and we're going straight for all-time highs. So that's one option. Now retest here, a little bit of bounce, and now if we start rolling over and finding acceptance below the trend line, then I think it's a high probability that we're gonna trade into this support area, and we can start looking for entries over here. People panic, call it end of the run between like 93.5 to 91.5. We might see a few days or a couple of weeks of this, and this will be a great area to pick up some spot or longs with a targeting all-time highs with a simple invalidation that we just don't want to see high time frames acceptance under that 92.6 level. Short term, it's fine, but we want 4 hours, 12 daily to close an acceptance accept above it. And then you have a first objective. Previous week high, probably gonna be very fast squeeze, and if that's cleared, then we going for all-time highs in June. Maybe even higher. That's how would I see it right now. So chop area, we might have for the next 5-10 days, have somewhere fun chop around here. Now, if we don't squeeze higher, let me just clear that up. What we might see as well, are we not going higher? This is exhaustion, too much is driven by, I don't think so right now, but we have to be open. So we start seeing some weakness here straight away. Everyone's anticipating for that move over here. We start seeing some weakness, and we either have that retest around that 97.8 area, and then we're gonna target those highs, or we're starting to see acceptance below. Then probably that was just a blow off top, and we're going back to the support, at least to the 93.5, to that original area we had here, just looking for liquidity. That makes sense? And that's how pretty much you approach every single chart. Questions? Do we have questions, or just talking to myself? Nobody pinged me, so I guess there was no questions. Feel free to list your questions. No questions? I don't see a chat. Why I don't see a chat? Top chat. Oh yeah, there we go. Yeah, no questions. Well, okay, I guess that's the wrap. Just to summarize, please like, retweet when we post it on Twitter. Press the subscribe, will be super helpful. None of the things said on this video are financial advice. It's just my thoughts, suggestions. Hopefully that was helpful. If it was, that's great. We can do it more often. If it wasn't, then I'm sorry that you wasted hour and a half of your life. Hopefully it wasn't. If you have any specific stuff you want to cover, we'll go through specific coins. I'll try to do those live streams at least once or twice a week. Maybe I'll just do them more of a specific for example, altcoins, meme coins, or just chart requests. We just go through, roll over through 10, 15 different charts of your favorite coins, and I can just pick up the request and play with that. I just want to grow this channel, and I think while I grow this channel, I can help you just to understand the process of thoughts I have, how I see charts, how I see the trading, and so on. Let me just answer this one question. Any tips for trailing stops, avoiding getting stopped out on long moves? If you're looking for swing trade, like for example Kaito, I'm not looking to take profit on like 5% move, so I'm looking for the for if it's a swing trade, I'm looking for at least that towards a 10% minimum. So I think very often, let me just open up the Kaito chart. So let's say you took over the trade. Let me just drop the 2 hour here. And I think a very common mistake is 90 here. That was the trade on Kaito. And I'll just explain you how I took profits. Like, so we saw that first big candle over here to the quarterly open, previous week high. One is also like the people of those even numbers, like 1, 50 cents, 150, 250, you know what I mean? So that was my first TP, that was the TP1. Then we saw another candle, previous month high, another 10%, that was my TP2. And my stop loss was here under TP1. So if I take TP, I'm just move the stops to break even after first one here. Then after take profit 2, I move stops under my take profit 1, so just over here. And then when we saw the next candle, I saw that cluster here. That was my here, take profit 3. And then pretty much I closed. There was like one big push, and that was my TP4. I pretty much closed it all. Because when I saw that cluster, I was thinking, oh, we might roll over. I took a juice of the move. It was 55%. So I missed out on all that part, but I took the whole of the trade here. So that's kind of how I trail stops. If I go for like a more of a trade like a Bitcoin, yesterday, where is it? Bitcoin, there we go. Whoop, click something wrong. So we had, let's see, re-entry yesterday over here. There was the stop loss and that was the trade. I'm happy with any like 0.70 to 1% moves, especially because on coins like Bitcoin, I can take higher leverage because it's very liquid. So you got that first move over here. Like you didn't even have a time to do smaller TPs. Like you can set up over here. Like the logic, how you can look at it, it's you look at the previous candle. So before that trade, we saw what was happening here. And there was rejection, 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 rejection in that area of 97.2 and 96.7 just here. So that could be easily your first TP. That's how you look at the take profits, TP1. Then you can move your stop from here to break even. Then was the previous week high. That's the reason I recommend to have the Spaceman key levels on TradingView. That was the next, that was the TP2. Then your stop loss moving from break even just up on the TP1. Usually I look for like 2 hour, 4 hour candles, so just below it, my invalidation. And then next take profit, I just took some this morning. Profit free. And now my stop is just under this previous week high, so my stop is just over here. So if we roll over here, I'll get stopped out. But if we obviously continue, I have my final take profit. I will probably leave like 10% of the trade in case we squeeze higher, but that will be my TP4 over here. Does it make sense? And what was the next question? How much size do you go in for shorts versus long? I don't have a difference. It just depends on the... That's one of the topics I didn't actually cover. I think that's the similar how people hold the NFTs or the dead coins for so long. It's similar people marrying the bias of the... There's this weird thing. It's always few people in a chart is like, I can't believe market did that to me. Who? Market is impersonate, you know? Like There's no the market. There's no one entity that is fucking you over. There's nobody sitting behind this hundreds of screens controlling the market thinking, you know what? I'm gonna fuck over Tinder Master today. I'll make sure that we go straight into his stop loss and then we squeeze back up, that's how the lot of conversation I'm reading on Corgi chat sounds like. There's this the market sitting there trying to fuck you over. The quicker you realize and accept that every mistake I make it's me. Every fuck up I make is me. It's not market. If I get stopped out, it's because I fuck up with my stop loss or I was the wrong trade. If I take profit too early, it's my fault. If I took the wrong trade, it's my fault. There's no the market. It's not Powell's fault. It's not Trump's fault. It's not Tao Foundation or Vitalik. I know we can joke around. It's fun on Twitter, have a banter on Corgi chat. But the quicker you realize that it's nobody else's fault but you, the better you will become, So the same thing going for shorts versus longs. I don't have a bias, and I think the more I avoid bias and ego, the better I do, So I don't care if we go to 102K or 105K right now. I don't care. I just look to trade the most available, like the best R&R trades, like the lowest risk, the highest reward trades, And I think a lot of people doing like longs only or shorts only, or I don't sell, or they're scared to sell that they sell or short. It makes no sense. Market giving you opportunity both ways. Why wouldn't you trade shorts and longs? Like, I don't know how to inverse chart. Pranay can show you later. Pranay, how to inverse chart so I can show something to people. Where's the inverse settings? I don't know. He was showing me that last time and I forgot. Oh, spare with me 1 second. Can someone call Pranay and get me inverse chart? Sorry guys, I'm back. Nobody got Pranay. Obviously he disappeared when he's needed. Okay, I don't know how to do that. I'll just explain. If you inverse the Bitcoin chart, so this will be a bottom and this will be a top, you will be looking probably for longs, or you'll be thinking about it. Does it make sense? Like, here's the bottom, here's the top. If I rotate, inverse the chart, it's exactly the same mentality behind shorting and longing. The thing is you just don't want to short the uptrend and you don't want to long the downtrend. And I think that's what a lot of people fucking up with, that they were trying to long this. And I did some of those mistakes too. It happens to everyone. But they were trying to long this instead of just looking for, like, you could completely in downtrend like that. You can completely ignore longs or just look for some swings. And here in the uptrend, you can pretty much ignore shorts, just look for some swings. So like in a chart like that, you look for longs and shorts only in inflection points or like extended moves, you know? And here you pretty much only look for shorts and you're longing only like extended moves. So like, let me just show it. So for example, we had, 1 second. let's do that like a little triangle, like a little trend line over here and from here, and similar over here. As we started uptrend, it's uptrend, and the same thing over here. Let me just remove that. Okay, so just like it's very like dumb it down logic, but from that cross and the downtrend, you could look on the, you can, that's like a little trend line. You can look for either shorts anytime it just goes above that EMAs, or look only for longs if it goes below the trend line. There was basically 3 big opportunities to long over here. 1, 2, and 3. Everything else was literally just looking for shorts. You had like 7, 8 big short opportunities in this downtrend, and only 3 for decent low risk longs. And same over here, like you don't really have opportunity to short it all that much. I mean, we did some shorts, a little bit like I think here and here, but generally I would rather focus on the market squeezing up. And now it's this area that I might look for some shorts, and I'm taking profits over here because it could be extended move. And also those ascending triangles like to do this extended move over here and then slam it back down very quickly. It's like a stairs up, poof, in one move. It's very often. So that's an area where I'll de-risk and think about shorts, but I'll rather focus on buying opportunities over here as long as we're holding above that 92.6 rather than trying to chase shorts, And I think too many people trying to short this move instead of looking for spot and longs, and too many people are longing this move instead of looking for shorts. So that's how I'll talk about the sizing between shorts and longs. It depends on the trend we have. And you basically focus on EMA 99 and those EMAs here, the trend line, to identify where we at. Above the EMAs, clear uptrend. You see, there's 3, we're holding above, uptrend. Below EMAs, downtrend. That's how I see that. That makes sense? Don't know how to invest chart on TradingView. He was showing me that, no idea. But anyway, if you imagine that chart inverse, like upside down, this will be area that you will be looking to probably for some longs, and this will be one for shorts if we inverse it. So that's how you short. It's exactly same trade. It's just the different direction. That makes sense? Okay, guess that's all. Thank you very much. I have to figure out how to close the stream. Whereas in Chroma Glass, I have to just press the magic button, close. Yeah. Okay, he's not shouting at me, so I presume that's yes. Thank you everyone for joining. Have incredible rest of the week. I am going to be offline for the next 3 days, Friday, Saturday, Sunday. I'll be a little bit of online, but I can't promise. I'm getting married on Saturday. My mom and sister and some friends coming tomorrow and Saturday. It's just a civil ceremony, but there won't be much online. So that's the reason I wanted to do that stream before. And cover everything before. So hopefully that was helpful. And if yes, I'll try to do the next one Monday, Tuesday next week, so we can cover some more stuff. Have a great weekend, and thanks everyone for joining.